Hi everyone. Okay, let's go through all the active coins. I'll go by alphabetical order, not Bitcoin to start with, or maybe I'll start with Bitcoin as usual. Let me not break the routine. So let's do that. Okay, and we'll look into all three. In fact, different four levels: intraday, one day, and weekly and monthly, right? And for all active coins we'll go through weekly and monthly. So for Bitcoin we'll analyze at four different levels, where for other active coins we'll analyze at weekly and monthly level. Okay, so that's going to be the scope for this weekly call, usual one, which is being recorded, and then offline we can discuss and go through different topics. So I started with one day. What do we see here? So one day I have different flavors for Bitcoin. I depicted or added some drawing to give different perspective. Different perspectives help sometimes to see the same thing differently, but the outcome is the same, the message is same. Sometimes some people, some drawings or some kind of chartings uh, is more intuitive than other. So my attempt is to show the same thing, but in different ways. And sometimes there are different technical aspects as well. As you could imagine that if you give a chart to any two TA or multiple TAs, they are going to come up with different drawings or different kind of charting, right? Analysis. The outcome won't be much difference because there are only two outcome, whether it's going up or down. So it's very simple, but the way you see the chart could be different, totally different. Somebody might see as a channel, somebody might see as some other pattern, and so on. So I'm trying to depict different patterns and technical aspects. So it gives different perspectives. It gives different perspectives, and but the outcome is not going to be different. The interpretation of overall direction is not going to be different. Okay, so let's start with this version, which is on Binance. Very simple, very simple structure here. What you see here is that this drop, and then now overall what we see here is the recovery. And now recovery has multiple things. First, the bounce. So for first and foremost is it must have some kind of a capitulation like this. This is usually the end of correction, usually, but not necessarily all the times, because it also depends. There is a condition that after the capitulation the price usually should have momentum after that, and it should not build pressure or break below that level. If otherwise, it the whole the support won't last long. So we have different cases. We'll look into two different cases today to showcase how the major correction ended. Okay, and his history doesn't repeat, the structure doesn't necessarily the same, but it'll give you some idea that what happened in March 2020 and what happened during May to July drop, which was around 50-55% from the top, right? And of course the March 2020 was deep one, and more violent and steeper. So we'll have a quick look at that as well, especially the recovery part, and I'll highlight few things that how it behaves during the recovery. And it's a test for traders that during this time it's a great test, whether we like it or not, but it's testing time, testing of patience, and so it's challenging time for sure. And during this, so first condition is it must stop with a good bounce. Like this is called a good bounce. Why good bounce? Because it didn't end here. The bounce is more than 50% of the overall drop for this daily drop. So that's one way to look at it, right? So for an example, this is the beginning of the drop, this is the end of the drop. If it would have ended here, then it would be a weak bounce, right? And somewhere here is the mid level, and now it ended here, so this is a good bounce, right? So that's one thing, but not everything. And then, but you can say it's a good start. So we saw ugly drop, but then a good bounce, so that's a good start, right? So that's that, we can consider that's a positive thing. But then we have to see how it progresses, then we come up with different levels, and then overall progress, and things could change during that time, and we track of those things and a price movement, and that's what we're doing at this moment. So in this version, if you look at very simple depiction, the orange level was the first level where it reacted. On daily you would not see, on a lower time frame you will see the day of correction, it bounced up to the orange level, and then it consolidated and tried to move up and so on. Now the previous support act as resistance. I haven't touched anything here. If you look at it, these previous resistance are still playing their role, right? And also this orange level, which was the first immediate resistance on the day of correction. So what you see here in this layout is this is a support zone. Now why this is a rectangle? Because not necessarily there is $1 number where it could retest. So sometimes the retest could go all the way to the lowest level, which is this one. And not only that, actually I could really make it little lower. I didn't do it because it's not necessary. If I do, it might go little below that as well. So I'm just keeping it here. But practically speaking, there can be a slight, it could penetrate this low sometimes. We'll see in the example. It happened in May to July consolidation. It happened that it breached the low, and you can see it's very easy to spot, right? So it happens, but this is not about going into that possibility, because it might not happen. Idea here is to come up with a band or a zone where you think that if it retests that this is the potential zone from where it will bounce again and then go for complete recovery. That's the expectation. This cyan color that you see is a typical consolidation zone, and if you look at it, it bounced and went up, but not truly able to break above. You may say this is resistance, but I purposefully kept 3 layers. I could have actually kept support zone and whole entire thing as resistance, but consolidation zone, the only purpose of having this consolidation zone to indicate that this is where you are likely to see most of the sideway movement. I mean, this was added when it was here, very beginning, because I was anticipating based on past experience that price tend to move sideways, and that's why consolidation zone was added, and resistance zone indicating that it will try to break above consolidation zone, like what you see here is the first attempt, right? And then a second attempt, and a third attempt, and a fourth attempt. You see how many attempts it made to enter into resistance zone? 4 attempts, because this is 1 day time frame. So already it made 4 attempts, and then it gave up. It landed where? Orange level. Each time it failed, more or less it landed on orange. Here it penetrated a little bit, but not a big way, right? And this was also kind of a support. There was a rectangle that I had drawn, so which I removed right now. But anyway, so this is a local support. Now on 1 day, this orange line doesn't make sense. On a lower time frame, I'll show you what significance of this line. And but yeah, so this is the very simple structure where, so this is we are expecting tries to move sideways within this consolidation zone, and if there is positive bounce from here, it will enter onto resistance zone. The time spent in resistance zone is very less compared to consolidation zone. There will be some challenges near S3 and ultimate S2, but I don't think the challenges will be that much compared to. So usually what happens is the challenges are more at the lower end, and then as it goes up the challenges reduces. The probability of recovery increases as it progresses on the upside. So this is how typically it behaves, right? So what our expectation is, it recovers here from here and try to go back to S4 level. If it is able to go back to S4 level, we can then expect it to hit S3 and then so on, S2 and so on, right? Ultimately what we need is 58k. You'd be wondering why. It's just technical level, okay? You have to just trust, because you saw how technical levels are playing roles here. So 58k is a must to have requirement, but if it is able to reach here, the probability of going down is lesser. It's not that it will, but the point is, as I said, each and every resistance, the probability of going down reduces, right? But this is where the probability of making new all-time high is highest. The measurement is always probability. There is no certainty. It never transition from good to bad. There is in between states. Okay, so this is the layout. So I think this is very simple to understand. We can have another layout, which is, I think this requires higher level, so I'll skip it for now. This is Bybit. Okay, so in this layout, what I depicted earlier, the inner structure, this triangle was broken, and then it tried to re-enter, but it failed. It's the same thing as we saw here, where it tried to break above S4 multiple times, but it didn't, and this particular candle broke it, the structure. And here it's a depiction is different. Why? Because each time it was getting rejected, it was supported by the yellow line. Probably what I should do is I should go at 12 hours, because on 12 hours you will see this. If I go to 4 hours, you will see more, that how this yellow line was a support, right? So this is the innermost structure at a low time frame. So this is about dissecting the consolidation, right? So dissection is to just get sometimes it gives you early indication. This kind of a 4 hour 8 hour doesn't tell you anything about the end result or a potential major move, but it gives you early indication whether it is moving in the right direction or not, or progressing well or not, right? For example, when I see this, I see weakness, okay? I see reluctance. So there is a higher probability when I open this 4 hour, and if I see this kind of behavior, then I can say the likelihood of correction in next 4 hours is higher than an attempt to go back to here. But maybe it's too early. Before the call ends, maybe we'll have a quick look, but this behavior indicates the weakness, okay? So the 4 hours tells you that for next few hours, not for few days or 1 day 2 day, at least for 4 hours, or next 2-3 candles, what can you expect? So when you go lower, the visibility is also lower. Remember this. So many people, or many junior, or I would say newbie, tend to track charts at a lower time frame. They love to track at 1 hour, 4 hour. Some people track at 15 minute and all. And there's nothing right or wrong, but if the goal is to understand the direction, that time frame gives nothing but noise. However, it has to be used for very different purpose, as I said, to get a quick pulse of the present, not for projection. right? So when you go lower, it talks about present. It never talks about the potential future outcome. You have to zoom out to find out potential future. So if you go to the monthly, that's the best outcome for a longer term future projection, right? So that's the TA part. So you lose some information, and it's nothing wrong. It's so that's why there's no there's somebody asked that what time frame you like to analyze. I said I review everything. Sometime I even go at a 5 minute, and sometime I go as a 3 months as well. But point is, there is nothing called favorite. It's about situational uh, requirement. Like you, sometime you have to see 5 minute, 15 minute, 1 hour, 4 hour, 4 hour. You have to start with the lowest and then go highest and so on. Sometime if the object is to just to see the direction of the trend, you never have to open a lower time frame and so on. But there's nothing called favorite. Each time frame has advantages, disadvantages, but it's they are complementary to each other. Idea is to look into all the time frame, right? So it's not a comparison. So people ask wrong question. I often say that when somebody asks wrong question, there cannot be right answer. So if the question has to be right for answer to be right. When I say right wrong, I mean accurate. If the question is totally irrational, illogical, then you cannot have a rational answer. Okay, so there's nothing called favorite time frame or what time frame is good. All time frame is good. It is contextual, subjective. So I'm looking at 4 hour, and I can tell the probability of downside move in next few hours is higher looking at this setup, right? And so that gives me idea that if I want to buy or not, right now, I'll say I will not buy. But this is for intraday. This session is not about analyzing the live chart for trading and all purposes, but I'm just giving an example for those who prefer to track at 4 hour or lower time frame. Those, if you are intraday trader, very experienced, and usually this is very helpful. So where it is helpful, if you are leverage trader, leverage traders cannot afford to leave that trade for many hours. Usually they have to close trade very quickly. Depends. So in that also, as you increase the leverage, the amount of trade lifespan also reduces. You cannot, so there's no exact formula, but the point is, if you are leveraging 5x 10x, it you have to watch consistently, constantly, and you have to close in matter of hours. You cannot keep for days because it's dangerous game and so on. And some people who leverage even higher, then they would be closing in matter of minutes, not even hours, and so on. So different skill, different objective, different time frame, right? As I'm speaking at this moment, you see how it is behaving. It's melting a bit, right? This is what 4 hours will say. I personally don't recommend anything lower than 4 hour, and 4 hour is, as I said, just to get a quick look at it. I mean, just to get a quick feel of it. Okay. And leverage trading, I just taken an example, but I personally very much against leverage trading because it requires tremendous skill, not just about knowledge of good TA, but also should be very quick in terms of exit and entry. So it is not for anyone who is unskilled. It requires extreme level of skill. People do leverage trading for money, but without skill, and they end up losing more. Anyway, so lower time frame is telling us that there is weakness at this moment. There was a bounce, but the bounce is getting rejected. As you see, there's a more downside pressure. So in coming hours, this bounce is likely to lose its gain, and we'll see. Okay, at this moment, this is what it's telling at 4 hours. So 4 hour looking weak, right? So I was explaining the inner structure. As you could see, And this was point of bounce and rejected. When it is rejected, I mean, when it broke this line, then it consolidating. So it found new low, and then there was in between there was an attempt, but a failed attempt, as you could see. So it always tries to re-enter. What you see here, you will see at a different time frame, at a different. So it's like a layer. So if you think about four layers, for example, it has to break first layer and then second layer and third layer. Similarly, when a rocket is launched, starting from the ground all the way to the outer space, there are like 50, 60 kilometers height, right? Once that is um, crossed, you can say the craft is in outer space, right? So but there are layers in between, stages and all. So each stage, when they cross, they think, okay, now this 20% job is done, 25% is done, 50% is done, and so on, and ultimately they achieve the goal. Similarly, if you think that this is a ground, it has to break above the first level, which is at a lower time frame, and then go and break above different. So this is what it does. And so it has to break inner layer and outer layer and so on, ultimately escape. When it escapes, we call trend reversal. It's now changing the direction. So it was going down and then now going up. So that's how it works. Okay, so this 4 hours, just to show you that the inner structure is broken. So now this drawing has to be changed. How would I change it? So maybe I can do this, but now I would keep it horizontal because it doesn't make sense to keep at some angle. So this the triangle is broken, and that's why I kept two drawing. If you look at the white box I kept, because I knew that inner structure keep changing. The inner structure is totally unreliable and ever changing. So the projection of this has to be removed because it didn't happen. If it would have continued on the along with the yellow line, then we could have expected the recovery at that angle. You know what I'm saying? So let me bring back. So when the this was moving along the projection with a dotted line indicating that this wave would continue going up in this direction, in this projection. But if this is broken, this projection is gone. So you have to say, and this is very common, as I said, because when at a low time frame, changes happen very quickly and it's unreliable. As I said, this is the one of the live examples that when you track at 4 hours, you think that this is a nice triangle and it is moving along with the triangle. You give the projection, but it's broken, and that's why you have to remove it, right? So this is the downside of a lower time frame. What you have to do is then change it to horizontal, because now it doesn't make sense. This drop came all the way to this one, so there is no other level but this horizontal level. So it again gives a lower time frame support. Okay, so if it drops here, you can expect it to get bounce from here, but all low time frame, and low time frame is unreliable. Okay, but we are just keeping it just for education purpose. Okay, not because this doesn't help in trading much, as I said, unless you are intraday trader. But we wanted to see how it looks like on 4 hours, right? So we looked at it. Okay, then what other flavor do we have? So this is another flavor which I think we can track at 12 hours. In this one, this has mix of both lower time frame and a higher time frame. I'll show you what I mean. This structure, if you look at it, so I have drawn this differently. There are two two arch and then like a kind of a path where this could go, right? So now there is a steep drop. Actually, I was expecting a milder one, but there's a steeper one. But that's not the problem. But here it's not about exact price level. The indication is this could be like this also. Now we can say this could actually correct earlier than we thought, right? And if this goes up all the way, and then it could again come down. So we can keep this too for now. So this particular one indicates that it doesn't even go to the orange but fails and retest this low, right? Again, I'm ending here. Note that I'm not extending, right? I'm ending here, indicating that it might retest this low. So this particular representation indicates that the the bounce didn't go all the way to the orange, but up to this and go for retesting, right? And then retesting could be here, here, here. We cannot, but I'm just keeping the maximum. So when I ending here doesn't mean this is the destination. I'm saying this is the limit, because that's the interpretation. This particular loop indicates that there's a bounce, go all the way and then goes up and then retest. This is the most annoying thing, and you will see this in during the May and July. We'll have a quick look. Remember this particular path, and then you will find out that what it did is totally very much similar. That it first went up, then down, went up and higher, not just up and retest, but higher like this, and then went down almost there, and then touched 29k and then shot up, right? So there are so many paths you could think of, but just to simplify the thing, that it could retest here, somewhere here, go up, come back here, and then go for the ultimate one. And if this particular level is broken, then of course it will look for the lower level. So this is how you interpret this version or this layout. Okay, as I said earlier, that different layouts give you different perspectives. There's no difference in whatever is the requirement. The requirement doesn't change. If you look at, this is the green box, which is around at 58 level, 58k level. That is exactly the same as what I have in the Binance. There's no change. Only thing is you see the layout and design and drawings are different, and it will also show the same thing from different perspective. So for an example, another, just to give you how you interpret. So this is the explanation of this lower part. If you look at the upper part, this is the 68k 69k level from where correction started. It landed here. If then this cyan color line, it touched, consolidated, and you see that this dotted sign, midline, center line, it rejected and ultimately rejected all the way and pushed down further, right? So it tried to manage a bounce here as well, but not much. I'm sure you are able to see this, right? You see, and there's so many attempts here, failed attempts, and this is a descending channel. So it tried to move within, but it broke in middle, right? So this structure gives you the idea that how it started, how it consolidated on early stages, right? And then how it struggled and then ultimately lost. And now what you see here is when the bounce, sorry, when it corrected, when it broke, it went up. It went up and rejected by the same line. You see, this is not coincidence. This is a technical level. This is another representation. So this level in other chart layout was some support level, which was a resistance. And here, if you look at, it's a trend line. So this is channels line, right? Trend line, downtrend line of a channel. And that also gave that particular level where it could react, and we saw the reaction, right? So there are multiple things, multiple methods you come up, and it could give you the same number in terms of price, where in terms of resistance or support. So here you can see this line rejected it. So what you saw in earlier flavor, where there is a tiny triangle where you try to entered, if you that's a first level, and this is the second level, you can say, where you see in this case what happened is it tried to enter this particular channel, but it failed, right? So what we are expecting here is it should try to re-enter again. So if it breaks above 52k, then it will re-enter from here, correct, around 52k. If it is able to remain above 52k, then you can expect it to move along with this line, and that's why this orange level and then other levels matter. Once it reaches this level, upper part of this channel, then you can say the probability of new high is higher, and that's why. So this is another layout. Also, if you focus on red line, each and every line here has significance and gives you the idea how the price movement behaving. Yeah, so here I extended this line or started this line from 29k, touched this line, and then you see it landed here. When it got rejected here, it landed here. The orange line representing the rejection point, this one, and so this is a confluence zone. So if you look at this is so much important. This particular line, this particular orange line, and then the red line, and this you see intersection. This is a confluence point, and there's a very heavy support. Now when you see, so that's why this bounce, and when you see the price rejected, and if it comes back to this level, why it is so important that this level is so important? Because if the confluence level gave a bounce and if it returns back, then it's not a good news. If this confluence level is a great support and if price also bounce but returning back, I mean if the price returns back, that's a negative news totally, right? It doesn't make sense, and that's why you as a trader becomes extra careful, simply because why it written, there was enough consolidation here, why it written, so it doesn't make sense. So it bounced but not able to keep up. So this is it gives you so many clues as a trader. This art of ta is something, it gives you so many clues and so much of information. Without this, it's impossible to understand. Without this, you would not understand. If I hide drawing, it's impossible to understand what is happening. But if you put these drawings, it makes so much sense that why it is rejected. You can say this is a line, that's why it's rejected. Why it rejected here? Because you draw a midline and then you get all this point of rejections. Why it's supported? Because there is a red line and there's an intersection. So when you ask, you're not going to get answer from bitcoin, because the bitcoin has no news, you know that. You can, so this is a funny part. People try to trade alts based on news, and the reality, alts follow bitcoin. You know that what happens to alts when the bitcoin goes up or down, right? So I will not give answer. I'll share, I mean I'll ask a question. So if alts are following Bitcoin and Bitcoin has no news, have you heard any news from Bitcoin other than what we hear from El Salvador that some maximalists keep on talking about? But that's not a news. I mean, one time news, fine, but it's not. There is no news on Bitcoin. You are not hearing that today 1,000 shops started accepting Bitcoin. In reality, it's unusable. That's why nobody's using it. Microsoft started it, it stopped, right? A few years ago because it was expensive fee wise. Anyway, I don't want to digress, but the thing is, on Bitcoin, you are not going to hear any major news. The technical change also come once in a year kind of a thing, or maybe after a couple of years. So what happens is, if the news are really driving, then there's no news on Bitcoin, right? Yeah, what kind of news you get? Some billionaire bought this and whatever ETF, those kind of news. But the point is, those news are also not very frequent. Um, so, but the price is not moving along with the along with the news. That's my point. There's no, people even don't know when the new release. So how many people knew that the version got upgraded? How many people are really tracking Lightning Network, for example, or upgrades to Lightning Network? I can tell you, nobody knows. So nobody even understand. If the Tarput was released, if I say what is Tarput, what happened, what they're doing, people have no clue. So people actually, Bitcoin, they support the most, but they follow the list. Not just follow the list, but it is a list. Even if someone tries, it's hard to understand because it's so much technical. and then there are not enough people who are there to explain things. Other people, and they probably think that because it doesn't require explanation, because it's accepted that everything is good about Bitcoin, and other need to explain because they have to prove themselves. So that's why they talk more. Some project leaders keep on talking about the project because they don't have a choice, and that's why there are always some events they organize, and that they kind of make some news for price movement because they don't have an option. So my point is, if Bitcoin has no major news, but still there is price movement, so how can you analyze Bitcoin, right? So that's a question, right? And the answer is obvious. So the point is, do you really need to trade alts based on news? Is a question for you. I'll not answer. Okay. So on Bitcoin, as you could see, is driven by technical levels. We have proven so many times, so many occasions, that their Bitcoin's moves are technical, right? And rest of the alts follow Bitcoin. Okay, so I think this is the this is a explanation of this particular layout. So this is a lower time frame. Now let's zoom out. Okay, since I talked about consolidation, you saw what happened here when it dropped, right? This is kind of a capitulation. So history doesn't repeat, but just to give a glimpse of it, how frustrating it could become. This was a ugly drop and a good bounce, right? And then it came down all the way here. So got to be mentally prepared, right, for that. It bounced, it didn't make new high, you see, and it came down, but not deep enough. Then it progressed, it made a new low, but more or less the same, new with respect to this, but uh, almost the same with this. And then it bounced, it made new high. Look at this, this is higher, this one is higher than this too. That's a good news, and you get happy. And then here you get the surprise, big surprise. Not this low, not just broke this too, but broke this one as well. Of course, intraday move, not the end of day closure. So this is a penetration I was talking about. So if I draw a zone, if I this is my boundary, you can say it has broken. Yeah, it's broken, but it didn't close. The day didn't close below it. It's just a penetration, right? So that's not so this is not, the day is not, I mean, daily intraday broken, but not end of day. So that's how it is described. But low point of view, yeah, this is a new low. And then when it went up not high enough, and then this low was higher. Of course this low was lower than this a bit, as you could see, but higher. And then again, so it so many attempts it made, and ultimately from here on, this particular one, he kept on going, made new high, even higher than this. Then it came down, but not deep enough, not like here, like what it did here or here. But then it went up and then made new high. When you see this, then you can say that you are out, right? You're out of this mess. Of course, then also you need little height, because you see the congestion here. You could see congestion and some kind of reaction. But the point is, the risk is much lower, because risk is higher here when it keeps on coming, right? So that's why. But once, even if it came down here, you can say this is far from here, and that's not a problem. And then it went up and so on. You know the history. Now, if you compare the same thing here, now you're going to so this is a low. So it could, if it comes down to here, you should not get panic, right? But the thing is, this has to be washed out, because when it happens, it's going to take down us in a big way, like in terms of percentage. And we don't know when, how many times it will touch this. One time, two times, three times. We saw how many times, at least three times, four times it happened, right? Near 30k, 29k. So we don't know how many times it will do here. So that's where the patients come. And that's why the understanding comes, and the patience comes only with understanding. Okay, patience cannot be bought. It's a side product. It's of understanding. If I say be patient, you cannot be patient. Okay, you cannot develop patience as a skill. Patience is an outcome of understanding. If you understand, you become patient. If I say be patient, it is not going to happen. But if you understand why we need to be patient, then you become patient. So the understanding of the reason why we need to be patient has to be clear. Then the patience comes. Otherwise, it's not going to happen. Now, if you understand the example that I gave, that this kind of a behavior is normal, historically it happened in past, and not the same shape, but more or less how it bounces, come down, goes up, come down, and so on. If you accept that this is how it behaves, that acceptance brings the patience. Okay, so that's understanding, and you have to accept it because so many times it happened in past, so you cannot just accept that it is going to fly from here. No, it may or it may not, but the point is, you unless you see certain levels, don't make up your mind that everything is rosy. When you do, then you're mentally prepared and the patience comes by itself. In fact, you won't think about patience because you're already patient. So that's how. When the understanding comes, even you won't even look for patience. For other, you would appear as a patient guy, but personally, you are not trying to be patient because you have understanding. So this is very important thing. For other, so if I'm not panicking, you think, oh, Mihir is so patient, but actually I'm not trying to be patient. I have understanding. For you, I'm patient, but I'm not trying to be patient. I'm trying to understand what is happening, and the patience is a reflection of understanding, is the outcome. I hope I'm able to explain it. That's how it is. So nobody can teach patience to anyone. Okay. So that's my message, that you have to understand it, then the patience will come. And note the key levels. Don't get excited for the bounce, and don't get panic for any kind of a drop. Just try to be neutral, just trying to be stand still. Okay, no need, there's no need for any emotion in trading, as I always say. Okay, emotions are needed for a relationship. Emotions are absolutely an enemy for trading. Okay, uh, and you don't need to be emotional. You go by levels. If this, do that. If this, do something else, right? If else, it's like simple conditional decision making process, right? So you decide. That's a planning part, that you have different levels, different supports. If this level is broken, do something. If lower level is broken, do something. That's plan. When you have a plan on your notebook, you must have a plan on notebook. If you don't have plan in your notebook for your position, whether about entry or exit, if you right now you don't have a plan on paper, not in your brain, on paper. When I say paper, it can be on your computer. But if you don't have your plan, I think right after this call you must have a plan, because if you don't have a plan, you won't be able to behave in a rational way. When tricky situation comes, any plan in your mind is not going to work. Your plan must be on paper. You keep it in your computer. So if it goes up, if you plan to buy something, then execute as per the plan. If it goes down, then you see what is my plan. Okay, and then you go for it. Try to make as a process. Trading must be a process. Okay, it should not be mood driven, it should be process driven. So plan driven, right? So right now all of you must have a plan. If you don't have a plan, it's not late. You note down what all coins you're going to reduce by what percentage and what level if it goes down. Similarly, what if it bounces, what level are you going to add what coin, right? And by how much money, percentage in terms of money and all. You do that. If any coin goes up faster, then you can change that. That's not a problem. But if you are aiming for certain coins, then you must have a plan that on the rise I am going to add this coin at this level by with so much of amount, and vice versa, like for downside move. So you must have this plan, otherwise you're not a trader. Okay, don't get offended. So I'm trying to keep it very simple. If you don't have a plan, you're not a trader. And you want to be a trader, I would like you to be a trader, not just a trader, but good one who has understanding of TA, because I'm putting so much effort. I could have concluded this call in 10 minutes. Let me tell you, I just need 10 minutes to conclude, but I'm spending so much of time. This is education. And because this is not signal channel, as I say, right? Ultimately, I would like you to learn trading. I would like you to learn TA, which I'm teaching you by so many examples, because this is how you learn TA. There's no TA. This is how you see the drawings, you draw drawings over and over, and that's how you learn TA. TA is not a process of learning something overnight, right? But you're learning TA. So I would like you to learn TA. I would like you to learn best practices. And then one day you should say that, okay, I know enough and I would like to leave the opportunity channel. And that will be a happy moment for me. And that's my goal. I'm not saying for sake of saying. Truly, I believe that one day you should leave saying that I have learned enough and I can do for myself. That will be the ultimate success for me. And that's the reason why I'm spending so much time. Okay, so I think I talked enough on one day. Let's have a quick look on weekly. I should go back to different flavor that I talked about. This one, right? Bitstamp. So now we are talking about big picture. We are not talking about daily movement at all. Okay. So now when you zoom out like this, your mindset should change, because it's like elevated view, right? So when you see elevated view like 10,000 feet view, you don't talk about streets and traffic jam on street. When you are looking at a city, it's like that, right? So, and another very important point, you have to first tag yourself. Are you a trader who operates at weekly, daily, or intraday? Don't change the style. Okay, you can change style if it doesn't work. For example, you might think that people are earning a lot with intraday. You try with a little amount. If you are not succeeded, accept that this is, I am not ready for it. I still have to learn a lot. Then you operate at one day. And then if that is also tricky, operate at weekly, and so on. Of course, you can try something with a small amount, but new traders must start at a higher time frame. Though, and many of the new traders actually start at a lower time frame. They do all the mistakes that are supposed to be avoided. For example, they go for fast moving coin to start with. They go for leverage trading to start with. They go for intraday charts to start with. So they do all sort of mistakes. They put 100% money in the first trade instead of incremental buying. These are the 4 key points, and these are the 4 big mistakes anyone could do to start. So when you start your when you start your trading in crypto, it has to be with Bitcoin, Ethereum, which relatively slower. It has to be 1x, no leverage. It has to be at least one day or weekly time frame, and so on. But people do the opposite. And once you have more confidence in what you're doing, then you try different things. That should be the approach. Okay, so this is weekly. So when you see weekly, it weekly slows you down. Remember, it slows you down because things move slower, right? Like if you think from a solar system, the Mercury rotates faster when the Uranus takes time because its orbit is longer, days are longer, year is longer. It slows down, not the speed of movement, but orbit completion, how much time it takes. So when you zoom out, what happens is it slows you down, and that's actually good, as I said, especially when you're new. And also the trend is known only when you zoom out, you know that, right? If you take any object in front of you and bring that object very close to your eyes, what happens? Like 1 centimeter, you cannot figure out the shape of it, right? If you take your phone and bring that phone all the way to 2 centimeter distance, what happens? You cannot figure out, first of all, it's a plastic sheet or a phone or what. Sometimes even the color gets blurry, right? So first of all, you lose the perception of the shape if it is too close. So that's why different objects to be seen at different levels, right? Otherwise the object doesn't seem to be I mean it's yeah otherwise you cannot figure out the shape of that object, right? So if it is too close, then you don't figure out. If it is too far, if it is not visible, so the optimum level has to be found. And that's what I'm saying. Yeah, that optimum level is different time frame if I compare. um, and that is your nature. What is your nature being a trader? Okay, you find your nature, you find your time frame, right? And then stick to it, because you have to, everyone has a different nature, and you have to see which time frame gives you comfort. Because if trading doesn't give you comfort, you should drop trading from tomorrow. I'm being very very clear about it. Anyone is feeling pressure, because see, if anything that you do should not be stressful, because it doesn't make sense why anyone would do something which brings stress to you. It's totally doesn't make sense. You do something to, for happiness or to enjoy. So if you are doing something which is stressful or likely to bring stress, why you need that? Why there is conflict? So it doesn't make sense if you think rationally. So the people think that the market giving you stress. Wrong. The people are actually bringing the stress. You know what I'm saying? And that's the, you don't have to accept it, think over it. People blame market, people think the coin is giving you stress. No, you yourself gives the stress or brings the stress. You are the generator of stress, in not just in trading but in life also. You will notice you don't blame other. Yeah, something happens sometime like COVID, you can blame COVID, why, whatever, but the point is, in most of the cases we are the responsible. So try not to do something which is beyond, to start with, when you think that it could be stressful. Or even if you try something, try in a manageable way. So for an example, crypto is risky, so if you have $10,000 to spend, spend $1,000. Even if you spend $1,000, it actually reduces the stress, because in a worst case scenario, what you lose is some amount out of 1,000, or whole, let's say 1,000 in the worst case scenario. Still, it's not $10,000. So I'm not saying that you don't take risk. I didn't mean that. What I'm saying is the risk should be manageable. If you see obvious stress, then you have to find a way. So for an example, as I said, investing 10% reduces stress. So you have to have that. So even if you go for something risky, you have to have a mitigation plan, right? Otherwise, it's like a jumping off the plane, like, is, you know, the outcome. But if you have a parachute, that's a mitigation plan. You use it. Of course, there can be a failure sometime, but you have to see statistically how many times it fails and all. So it's not that, so activity can be risky, but are you prepared for it? So you can jump off the cliff, but if you are having parachute or some kind of a gliding mechanism, you can do that, right? So the risk is not a problem, but your preparedness is the question. Are you prepared? So if you're not prepared, so many points I mentioned, then that risk is going to bring stress. So if you're planning to jump and then you say, oh, or if you're having like a voyage and like your boat is shaking and you don't have a life jacket, something some kind, then I can, this is what happens. People go in the water without a life jacket. People try to jump without parachute and so on. So these are suicidal, activities. Of course, I took their extreme example, life threatening examples, but it's the same thing. Financial death, you may say here, not a life, but it's one and the same thing. Anyway, so the point is, um, first of all, ask yourself, what is the comfort level in terms of time frame. Choose that time frame and start with that. Okay, because the trading should be fun. If trading should not be stressful, that's my message. So if it is stressful, that means you're doing something wrong. Don't blame the market. Okay, and ask me. I'm here. If any confusion, any question you might have, but this is very important. Right. So weekly, if you look at it, it tried to break above, rejected. So still, the 70% probability of following the yellow path is there. 30% for the upside. If it breaks above, I'll make it 50-50. Break above the white level, then 50-50. If it comes to this level, then it will be 70 upside, 30 downside, and so on. Basically 30-30-70, it's not about 25-75, it's not about exact number. 70-30 is to indicate that there is a higher probability of downside move, lower probability of upside move in current state. So that's the interpretation. Okay, so this chart is so simple. This is a upper range, right? And this is a low range. You see rejection, you see rejection. Current level is a little on the higher side. This low was on a mid level. If this low is broken and comes down to this region, then you can imagine the downside pressure will go up. Still, this is a potential point of bounce, and it could bounce, but from this support also. But if it comes down to this, I'm not drawing any green dotted line. Technically, it could, but I am not, because I don't think if it comes down to this level, it can survive, because then I'm expecting it to hit 19k or 20k range if this 29 is taken out. Because it doesn't make sense. This pattern is called rectangle pattern. You can search up on internet. This is called rectangle pattern, where this is entry and this is exit. And we have to track like this. And this is the simplest version, and this is the most important version out of all, in my opinion. Other versions are not bad, but they're noisy. This gives you clarity. Once it breaks above this level, then you can say it's 50-50. Once it breaks above 58k level, maybe I should add it here, green level, just for consistency. 58k level. If it breaks above 58k levels, I should, yeah, then I'll change the probability to 70. It's higher. Okay, so I hope this is super easy and easy to understand. So I would insist that you focus on this layout and keep this big picture in mind. Okay. We'll have a quick look at a monthly as well. So the monthly, if you look at it, the November was red, December was even deeper. So it broke the September. If you look at it, it erased the whole entire move from September. That's not a good sign. It is here. So if it comes down to here again, then the September low is at risk, and in that case, it could go below at a 40k, 38k level roughly. Still, it could survive, but then probability of going down goes up significantly high, in my opinion. Not necessarily it could, but it's not a healthy sign. It must not reach here, as I explained. Up to this level is still okay, 39, 38k. And that would, anything below 38k is like big red flag. And yesterday I said that I consider that this is the end of bull run unless it breaks above 58k. So you can say that's a conditional call. Conditional call means it's a condition. So if it breaks above 58k, then that has to be ignored. The call has to be ignored. Otherwise, because sometime it's easier. So I'm taking a side of potential downside move at this moment. If you want to call me bearish, you can. I don't mind. I will change um, my stand if the price bounces, because there's nothing wrong in changing. um, Whatever I stated is conditional. So if the condition changes, my stand changes. Okay, it's not. It doesn't make sense to keep sticking to the stand even if the situation is changing. So when it started bouncing, I was bullish at different points. Those who are there on opportunity channel like for long knows that when it was here, I was bullish and I said nothing to worry. So it's so, you might thinking that it's here not here, then why I'm more thinking about downside pressure because of technical reasons. It doesn't make sense to form this pattern from here, from new all-time high. It doesn't make sense to me. So but if it surprises me, I don't mind changing, saying okay, it's surprised and went above 58k, so okay, fine, I have higher target ready. I don't mind saying that okay, now we are talking about bull, right? So at this moment, I see that this is likely to continue going down and likely to break below 29k and likely to go for 19-20k, 19 or 20k range. And if situation changes, then of course I'll update you. This we are anyway analyzing all these calls. We are having checkpoints. Any moment in time, if we see change, we're going to um, we're going to know, right? So that's not a problem. So this month is critical. If this month, especially this week, as I said, was critical, and we saw how important this was, right? Last week I mentioned that why this week was important. We saw what happened in this week, and then again the next week becomes important because next week is going to tell us the recovery, strength of the recovery, correct? So next 7-8 days will confirm what it wants to do, and sometimes it can take 2 weeks as well, depends. But at a higher level, this December month is going to set the tone, whether we are looking for a higher level next year or 19-20k level. We are going to come to know very soon, matter of few days. And I think next week is going to tell us a lot. Who knows, right? So that's my expectation, timeline point of view. At this moment, everything is going very slow. And when I think this September bounce, in my opinion, was more or less, this was ETF bounce. This is ETF bonds. Anyways, okay. So what else? So this ends the Bitcoin analysis, and then I'll take some questions.